All right, guys, time for a market update. Are we in an economic recession right now? Or is one looming? That's a point of argument. I would debate that it's already here. Now, the amount of coronavirus cases in this country, we're still in the infant stages of that, but they are roughly doubling every 3 or 4 days in every state or territory where they exist. This is a pattern that we also observed overseas as well. And the peak of the coronavirus probably won't be till April or May in this country. And that's what some experts are hypothesizing. So that's not really known yet as a fact. The preventative measures of social distancing is something that I think will outlast the peak and maybe the virus as well. It's going to have a permanent impact on society and all of the industry. And also the aggressive moves of the Fed in recent weeks, as well as the stimulus packages being approved. I believe that happened either this morning or last night. That is leading to some short-term relief, which is great. It's preventing layoffs, which again is great, but it's going to have some ramifications on the economy in the long term in the form of inflation, most likely. Nobody knows when that's going to be or how severe it will be, but that's definitely in the cards. At this point, it still really isn't known whether this economic softening, recession, whatever you want to call it, is going to be worse or better than the great financial crisis between the years of 2007 and 2009. With that recession, we saw a drop in stock prices of about 59%, and that took from the last quarter of 2007 to the first quarter of 2009 for those prices to fall. On top of that, unemployment peaked at 10%. So it's going to be different. How different is it? Time will tell. So let's talk about the great financial crisis and the impact that that had on the sports card market at the time. The most highly sought after baseball players at the time were Buster Posey, Josh Hamilton, Robinson Cano. That's just an example of a few names. And those guys didn't really see a drop in prices. They were still highly coveted during the stretch 2007 to 2009 and afterwards. Now, one thing that did change was the amount of trading volume. And this is something that we're seeing in today's environment as well. So back in 2007, if you really wanted to sell a specific card, sometimes it meant settling for a price you weren't comfortable with or waiting a week longer to sell said card. Also, something that happened was, given all of the financial hardships that people were experiencing, we saw more collections that were being liquidated and flooding the message boards that existed at the time. But having said all that, it wasn't really a revolutionary impact to the sports card market at the time. So naturally, I wonder if the impact on the sports card market in 2007, 2009 was muted because it was still in a stage of an early upswing. It still wasn't fully recovered from the mass production era that happened 10 to 15 years prior. Almost like the analogy of, tall people fall hard. And if you're to look at 2020 in February, you have a very strong market. So on one side of the coin, you can argue, the market's stronger, there's more demand, there's more momentum. So it should be able to withstand some sort of an economic recession. But you also have overinflated values, and this is difficult to quantify, but I would argue that a lot of the modern cards of modern players that have debuted in the last 1 to 3 years, or maybe some prospects as well, those were selling at prices that were unsustainable. We saw some parabolic growth across the board. It's not just pertaining to one specific player or even one specific product, really. So maybe it was just a matter of time before some air had to be taken out of the modern balloon. Maybe we didn't need to depend on a recession to even do that. But it makes the impact appear, at least on the surface, to be more severe, having seen the recent drop in prices. First, let's step back and discuss how each factor is affecting the sports card market, starting with the economy. Pretty much every major U.S. market composite is down right now between 25 to 35% from highs. So the S&P, the NASDAQ, etc. This affects people's 401ks or retirement accounts. It affects people's personal brokerage accounts. On top of this, you have the rampant increase in unemployment. Hopefully, most of this is temporary, but the fact of the matter is that this is affecting people's disposable income, and it's hurting the amount of money that they can spend on sports cards. It's actually hurting their willingness to spend on sports cards, because there's plenty of other things to spend on other than luxury items. Having said that, we're not seeing a symmetrical or linear dive across all modern sports cards. High-end cards, I would argue, are being helped because many of the current owners of those cards are in better financial situations, so they're able to hold and withstand a recession. Now, this isn't always the case. Some of those owners are going to be very highly levered, and they might be more desperate to sell. Next, rare cards overall are helped because it'll take the holders or owners of those cards to put them up for sale in order to see any price drop. And there's less likelihood that rare cards will be thrown out in the marketplace versus the common ones that everybody has. Also, I think that the more common cards were a little bit inflated. So some of the Topps flagship PSA 10 rookies that are still selling at double November's prices, I think they have more room to go down. The next factor is stoppage in play, and this affects basketball, hockey, and baseball to different extents. You could argue that the impact on baseball could be much worse if there is no season to be played at all. We don't know that at this point. But like any other market, like the stock market, the sports card market thrives on news or on hype. Players filling up stat columns, anticipation of that player debuting in April. Where I'm trying to get to is usually we have a cyclical pattern of sports card values, and with baseball, starting in November, you have fall league starting up, and then December, January, you have the winter meetings, and then in February, you have, the top prospects have already been announced. You have pitchers and catchers reporting, and everybody is anticipating and buying and optimistic and waiting for the season to start. A lot of these people are just assuming an increase in values, which usually happens between the February to April timeframe, and they're able to make some profit and sell those cards in the middle of the season or towards the end of the season when the player is in the playoffs. But this rally/hype train might not be around till like December for baseball. That's if there is no baseball. And I think this comes into play a lot with prospects. Unlike players with a more established track record, I think prospects are going to take a more sizable hit because the payday that a lot of these flippers get once the player debuts in the major leagues, that's been delayed indefinitely. Think about a player like Wander Franco or Joe Adell, who might have made their major league debut in 2020. Might not happen now. I think a lot of people are also overlooking what the stoppage of play might do to Topps manufacturer. I think that a lot of this year's releases are now going to be postponed or maybe even canceled. I think that the ones that are released will be cut in regards to the print run because of less anticipated demand from not just the economy, but also from stoppage of play. I think they're going to foresee less buyers of these cards. Think about the impact on hobby shops. Hobby shops are retailers just like any other. With the impact of the coronavirus, with social distancing, a lot of these retail shops have closed or have seen a significant drop-off in revenues. On top of that, you have most likely less new product that Topps is putting out for these hobby shops. And this is an area where they make a great deal of their revenue already. This is just a very bad recipe, especially when a lot of these hobby shops were struggling, didn't have the strongest business model already. Maybe they rely on Magic the Gathering tournaments, which aren't happening right now. And I just think that a lot of these hobby shops won't be around in 6 months, unfortunately. You look at the impact on the breaking industry, a lot of the smaller breakers will have to cease operations as well. Similarly, shortage of new product and also a drop of demand. We talked about consumer spending. There's going to be fewer shows, which means less avenues for people to buy and sell cards to avoid taxes and to avoid eBay. PSA and BGS grading services being closed also has an impact on the sports card market. And Fewer cards getting slabbed over the short term time horizon means that there is going to be a smaller supply of graded cards, and I would think that that's a good thing. But the bad is that there is a decreased incentive for some people to buy raw cards or to buy packs to open them with the end intent of submitting those cards for gradings. You're not going to be able to do that right away. So all of these factors, the stoppage in play, the effect on dealers, the economy, the effect on grading companies, all of these are short-term. They're not long-term in nature. But the sports card market had a greater percentage of collectors versus investors during the last financial crisis in 2009. Many of those collectors have a long-term oriented focus, where investors, they can be long-term as well, but they're often short-term with their holding periods. And I would argue that these investors are more likely to sell when there's a period of volatility because they're short-term investors often. And they're also more likely to jump off the ship when it's sinking. In this case, when the future of the hobby is bleak, as it is today. My thinking is that more investors are going to be leaving this hobby versus coming into the hobby until January plus, or whenever a date is announced where baseball activities can resume, whichever comes sooner. And I also don't think that the bottom is here yet for these reasons. One possible scenario is that the juiced values of the highly available cards never return to February's price levels, and I wouldn't be shocked by this. So what should you do right now? Should you sell? Should you hold? Should you be buying? I think there are reasons for all three. I'm going to go over that right now. If you're looking to sell, hopefully it's for a liquidity event. You really need some cash, or you're looking to de-risk. Maybe you feel overexposed to sports cards and you want to minimize some of that risk. Maybe it's because you're confident that a better bull market is coming. Now, there's always going to be risk with timing a market. You're never going to be able to get it as an absolute low. Same thing with the stock market. Another good reason to sell is because you want to realize a gain. You're selling cards that you're not going to take a loss on. I think that's fine. You could hold, which, sparing additional context and financial constraints, I think is generally the wisest move to make in today's market. Generally, you don't want to be selling at a low point. If you can stomach the unrealized losses that are occurring today, then I think it's a very prudent move to hold. The hobby was very strong before all this happened. Sure, some prices of key cards might have been inflated, but you can't deny that it wasn't functionally strong and growing. Think about this. Almost anything you could have purchased in the year 2007 before the great financial crisis happened, and you would have been better off if you held it till today, regardless of the downturn of 2007 to 2009. Should you be buying right now? I would urge you to be very cautious right now. Only buy if you find a killer deal. Don't overpay for something, whether it's common or rare. I think it's okay to set alerts to watch certain cards. I think it's very important to be patient. Something I'll focus on in a future episode is where to find value in today's environment. But generally, you don't want to be making concessions. You don't want to be settling. This is a time where you can afford to seek out and acquire the best example of a certain card. The holder and the card beyond the holder both matter. In conclusion, there are greener pastures ahead, not just for the economy, but for the sports card market as well. And like what we said with the sports card market being very strong before COVID-19, most experts suggested that the economy was actually in very strong functional shape as well before the coronavirus. Now, not every recession is the same, and the full rebound of the sports card market might take 6 months to 2 years plus. It's likely going to have a different pattern than the stock market. Like with any other recession, equities and cards aren't going to be in lockstep. The longer we go without baseball games, the longer the rebound. I do know that. To cap things off, a recession is an inevitable, harsh reality of any healthy asset class. And while modern sports cards might not be characterized as an asset class to some of you, this means that there's going to be a bull market to follow regardless. The key question is, when?